All right, welcome back to Daybreak. I'm Victoria Rubadiri, continuing our discussion on the manufacturing sector here in Kenya. Let me reintroduce my guests. We have Samuel Karanja, CEO of the Kenya Importers Association. We also have Phyllis Wakiaga, CEO of the Kenya Association of Manufacturers, and Reginald Kadutu, an economist and financial analyst. Thank you all for staying with me. Reginald, let me come to you. Of course, we had some technical issues a bit earlier on, but to revisit the question that I posed to you in terms of the trajectory we're likely to take for Kenya and for Africa, and of course, the closest model that we usually go for is East Asia, which was very labor intensive. It was dependent on exports. Do you see the same happening for us on the continent, or are we likely to craft our own path?
I think we have to actually craft our own path. Why? Because manufacturing is very capital intensive, and capital is one thing that as a country we don't have. That's why we are currently at 7 trillion in terms of debt, and it is not sustainable going forward. So we need to look at a low capital intensive way of industrializing. And how do you do that? You go to your largest sector, which is the sector that you have comparative advantage in, which is agriculture. You have the good climate, you have the good soil, and you have people that have the skills in that sector. And you say, how then do we start manufacturing from a low capital base? Instead of us assembling Volvos in Kenya, why are we not assembling combined harvesters? Why are we not assembling irrigation equipment? Why are we not assembling tractors? So if you say now we need to assemble tractors to help mechanize our agricultural sector, we need to assemble or manufacture pumps for irrigation, including the piping and everything. Then we now work backwards and say, okay, which areas need this equipment the most? So you go and set up a tractor manufacturing plant in Kericho, or in wherever we have the highest agriculture. So what you have done there now is, one, you have created employment where people are, which helps solve the problem of rural to urban migration, which Nairobi is suffering from currently. You are growing manufacturing. You have a local demand for those tractors. And if other things are also done well in terms of electricity taxation, then those tractors are cheaper than the tractors that you would import into the country. So I think the trajectory that Africa has to take and Kenya has to take is to build our manufacturing around our comparative advantage and looking at our weakness that we don't have so much capital, so that we move away from borrowing. You start with low capital intensive things. Creating a plow, manufacturing a plow, the spade of a plow and the stick that goes into the plow is not capital intensive. It is low capital, but it is still manufacturing. Then from there, as your agricultural sector booms and productivity in that sector also increases and income also increases for those people, you realize the excess money in the agricultural sector can go now to start funding the other capital-intensive manufacturing sector, and that way you have balanced both. You have grown your manufacturing sector without necessarily indebting the country to the level that we are currently.
Phyllis, let me bring you in terms of some of the challenges that exist in the sector and would hamper further growth. One that you hear countless times from local manufacturers is the cost of energy. You know, in some cases, for instance, in the apparel industry, you can find that energy accounts for about 40% of unit cost of manufacture. How do we get around that? Because, of course, I know that has to do with maybe policy and boosting the power generation in the country. But how do we deal with that hurdle?
Yes, Victoria, cost of energy is one of the issues that affects the cost competitiveness. As I mentioned, we have about a 13%, 12 to 13% cost disadvantage. The first bucket is relating to how we import our products, the cost of bringing in your raw materials, PVOC and other things. And then the second bucket is the in-factory costs, and that's where the cost of labor, cost of production would fall, and then the outbound costs. So in terms of cost of electricity, it depends on the sector. Apparel, by the way, for example, is not very energy intensive. The textile mills, on the other hand, would be energy intensive. And then we have certain sectors like the cement sector, the building, mining, and construction sectors, where we have steel, that are very intensive in terms of energy consumption. The other thing is, when we look at energy, we also look at it holistically in terms of the reliability and the quality of power, because that also affects the output in the manufacturing sector. So as a way forward, the reality is we have to look at our country, and the priority would be to look at the labor-intensive sectors, so that for those we develop a way to lower the cost of power, whether it's through rebate schemes and other incentive mechanisms. Then for going forward, as we grow our economy, as we grow our power sector, it's critical to still look at the cost overall for the country, because an investor looking into the country and making an investment decision will ask for basic parameters like the cost of power. So that's something that we still need to address as we move forward. But for now, the priority would be to look at the very labor-intensive and energy-intensive sectors and see how we can reduce their cost, and in the long term also reduce the cost overall for the entire economy.
And Samuel, when we talk about, just practically speaking, when we're trying to transition more local traders, local players into manufacturing, is it something that they're even attracted to and they feel they'd want to get into? Because at the end of the day, people are doing this because of livelihoods. How do you, in the practical sense, convert them into that space?
We have our members who want to transit to the local manufacturing, and we had meetings with the government agencies, because what the government agencies are doing, they are trying to make the importation very difficult for our members. And so we saw, there's no way of survival until we are able now to, transit to the local manufacturing. But as Phyllis is saying, local manufacturing has its own handles. Number one is the cost of manufacturing, and I can give a practical example of one of our members who decided to have local manufacturing of bulbs here in the country, somewhere in Ruiru. And the policies and the things that he has to be able to go through, the bureaucracies that he has to go through in terms of permits, in terms of Kenya Bureau of Standardization. There are so many government agencies who have come into play. And one of the things that really discouraged us is even Kenya Revenue Authority being able to go and count the bulbs. And so when you look practically at the cushioning and the incentive that the government is supposed to be giving to people who want to migrate from importation to local manufacturing, it's very impractical. And what the government is supposed to be doing is supposed to be facilitating such people. Like that member of ours was importing electronics, but he saw an avenue whereby instead of me bringing in bulbs, why can't I manufacture those bulbs practically in the country? And so that's a person that the government should be able to consider and have them assisted in to ease the business of his manufacturing. And so we want to migrate, yes, to the local manufacturing, but the policies which govern that area and even the bureaucracies from different government agencies are a big hindrance towards local manufacturing. And the cost of electricity is too high, even for him to manufacture. The first year, we were discussing about his first year of production, and he was paying electricity over 50,000 shillings. And when you look, it's a very small manufacturing plant that he's paying over 50,000 shillings. When you look at the cost of manufacturing and importation, he's making no money. So I think the government should be very realistic in terms of the incentives and the cushioning that they're supposed to give to local manufacturing. But as of now, it's just on paper and it's just talks.
Reginald, Sam raises a very important and critical point, which is ease of doing business. That has made it practically impossible for many, as he mentioned, wanting to get into manufacturing. Right now, Kenya is at 56 globally. The government, I know, did have the target of hitting at least in the top 50 by 2020. That hasn't happened. But how do we remove the red tape? Remove the bureaucracy that would hinder many wanting to get into manufacturing?
I think that the number one largest cost when anyone talks about manufacturing will be the energy cost. And how do we make our production of electricity cheaper? Because if you look at our cost of electricity vis-a-vis the other members in the region, our cost of electricity is actually high. when it comes to Africa at large, our cost of electricity is also very high. So the government needs to look at cost-effective methods of producing the power, distributing that power, and managing the losses that we make on that power. If you look at a standard power bill, the amount that is actually for the kilowatts is actually very low. Vis-a-vis the amount of taxation, fuel levy, and all those other things that come into place. So it moves us back to the fiscal policy side of government policy, which they are in control of. So if you're going to ease, number one, ease of doing business or setting up manufacturing plant in Kenya, as Samuel said, we definitely need incentives. What is my incentive of coming to actually set up a manufacturing plant here? What is my incentive to move into manufacturing? Right now, there are pretty much very little tax incentives across the board. Kenya is one of it's not even in the top 10 in terms of cheap taxation in Africa itself. So I'll give you an example. We are currently trying to negotiate a free trade with America, with the US, which is a good thing. And as we are doing that, I would advise the government then to think of, if you can reduce taxation, if you can reduce electricity, if you can curb corruption, because corruption tax in Kenya is actually sometimes even more expensive than the electricity cost that everyone is crying about. Mm-hmm. You can then say to someone, come and set up your manufacturing plant in Kenya, I will give you free access to the US, or I'll give you free access to the UK. You can tell a US company, come and set your manufacturing plant in Kenya, I'll give you access to East Africa, or I'll give you access to AFTA, Africa Free Trade area. So the opportunities are actually there for Kenya to become industrialized without breaking a sweat. But then we need to curb debt. If we curb debt, then definitely taxation will reduce, because our taxation is not going to reduce because we have to repay all the borrowing we have been doing. So if the government can curb debt, its appetite for debt, then we can say future taxation is going to come down. But anyone who's coming into Kenya right now knows that future taxation is definitely going to go up because of debt repayment that needs to be there. So my advice on trying to ease doing business, apart from what World Bank say, was on the ground things are normally very different from what the World Bank report says, is let's sort out corruption, put out our cost of producing and distributing energy, and let's remove the corruption tax that is on everyone who tries to do anything sensible in the country.
Phyllis, let me ask you this, because Reginald mentioned this issue of kickbacks, corruption. How much of a factor is that in the manufacturing sector and also in hampering growth? And also, it acts as a barrier for people wanting to get in. They simply can't afford or not willing to pay kickbacks to get into the industry.
I think the issue of corruption, as Reginald has said, is an elephant in the room, because if you look at statistics in the past, it's been said that a third of the budget in Kenya goes towards corruption. And that's a big hole that affects the fiscal space in the country. So the need for us to curb corruption, I think, is quite critical, because it does pose a big tax, as has been mentioned, sometimes even higher than the cost of power and other expenses. So it's important that we address this issue, and it's a very real issue in the country. As a business community also, we do recognize the fact that in cases where sometimes corruption occurs, it's two-way, and we do encourage our members as much as possible to ensure that they carry out ethical business and ensure that even within their supply chains that they are carrying out ethical business. This way we reduce the corruption within the country and what is happening. Consequence management, I think, is also very important. So the consequences towards incidences of corruption, how that is dealt with, I think will be very important in sending a signal that there's a cost or that there's an implication in situations where people are corrupt. So this is an urgent issue, an issue we must address, because if it plugs about a third out of our budget, it's not something we can take lightly. And our fiscal issues, debt issues and others will not be addressed until we become more efficient at government level and address the issues relating to corruption.
All right. And let's take a short break. I want to cross over to one of my colleagues in Migori County. James Latano, who has an update on the transport industry there and some of the new developments. James, what can you tell us this morning? James, I hope you can hear me. What's your update on what's happening in the transport sector this morning from Migori?
Now, we are at the main bus terminus of Migori, where now close to estimately 1,000 matatus are moving, ferrying people from the stage to other places. This has been a place where they get their daily breads. But since the corona menace started, now they say that business has gone down. One of the reasons is because now the vehicles that they are using is the number of the people in the vehicle has been reduced. This, they say, has really cut down their input, what they get per day. And they say that up to this moment, they are not really, they have not recovered from the punctures of the economy that has been inflicted in them by the COVID-19. I'm now joined by one of the taxi operators in this place, who's going to tell us how the experience has been ever since corona menace started in this place, especially in Migori County.
Yes, kwa majina naitwa Joshua Onyango. Tulikuwa na shida tangu corona ianze kwa ajili ya magari. Gari ilikuwa imebeba watu 14. Sasa hivi gari imebeba watu 8. Hata kufanya service inakuwa shida juu watu 8 ukipandisha bei abiria pia wanalia. Sasa hivi imepungua kidogo. Tungeomba serikali angalau atufungulie njia watu wengine, tuweke hata kama watu 10. Angalau tupate kitu kidogo, tugawe kwa service, na sisi pia kama mfanyikazi tupate pesa. Juu watu 7 kama watu ubeba watu 7 kutoka hapa hadi Kisumu ni 700. Ukipiga hiyo pesa hailipi, hata fuel huwezi weka. Tunakuwa na shida sana. Sasa tunaomba serikali atusaidie.
Asante. We also have a conductor with us here who's going to tell us the experience that he has gotten since the corona started in this industry.
Mimi kwa jina naitwa Jared Otieno Odhiambo. Mimi ni conductor kutoka Migori. Sida tumeona kutoka kwa hii corona, tunabeba watu 8, na watu 8 tukibeba kwa gari, hata abiria wataki kulipa pesa mzuri. Alafu sida tunapata, unapata kama conductor fika jioni atupati pesa, kuna pesa tunapata. Hata saa hii vile mmefungua shule, watoto wawezi enda shule, pesa kuna. Sasa hiyo ndio shida tunaona kwa hii corona. Hii corona hapa kwa Migori, sisi tunaona mfungue kazi, watu wabebe watu 13 vile tulikuwa na beba zamani.
Now we've gotten it from the participants of the traveling industry in Migori County. One of the main factors that is here is that families are depending on the matatu operation in this place, and I was told in the side lanes that close to 1,000 matatus transport passengers from Migori to different parts of the country. Now they can only use 350, which cuts down their income, and for now the sector has been paralyzed. Back to you.
All right, thank you for that update, James. And of course, we'll be following that situation in Migori throughout the day. Back to our discussion on the manufacturing sector here in Kenya. My guest still with me, Phyllis Wakiaga, the CAM CEO. We also have Samuel Karanja, the Kenya Importers Association CEO, and Reginald Kadutu, who is economist. Let me come to you, Phyllis, because, you know, for a long time, manufacturing has been seen as a preserve for bigger foreign players who have the muscle to handle such a cost-intensive industry. But when we talk about building capacity locally, how do we do that and opening up the space for local players so they don't feel like, oh, if I don't have a certain name, I won't be accorded, you know, the incentives or the treatment that maybe a foreign player has been?
So manufacturing and value-add business has different sizes of players, all the way from the multinationals, the large, the medium, and the small players. And it's not only highly dominated by foreign companies. There are a number of local companies involved in the manufacturing sector. I believe what I observe as the challenge we have in the country is the ability for us to grow our businesses from being small and scaling them up. If you look at our SME sector, our small and medium, our micro and small businesses are about 90% of the businesses within the manufacturing sector. And the rate of escalation or growth within from micro to small to medium is quite slow. It's about 0.025% per annum. For countries where there's a lot of growth and development and strong manufacturing sectors, the growth is at about 5% per annum. So the key thing is, how do we develop programs that support micro businesses and help them scale up to be big businesses? The deliberate incubation services by government is what makes a difference. Once we identify sectors that are very closely linked, say, to our manufacturing sector, it's important that we incubate and handhold businesses to be able to scale them up. Because if we don't do that, what happens is businesses either remain micro forever or they actually die. In the process, you then are not able to stimulate and grow your sector. Another critical way to do it is to create linkages with sectors like the agriculture sector for more value addition within that sector, and also to create linkages with the larger players. So the role of the larger manufacturers a lot of the time is to see how we support and work together with SMEs. So within the association as CAM, for example, our SME sector, the connections and linkages between ourselves and the larger manufacturers is something that we are seeing stimulating the SME players within the manufacturing sector, because they are able, first of all, to subcontract some of their work to the SMEs. They are also able to be suppliers of the larger manufacturers. We also have programs where people are volunteering to mentor the smaller businesses, sit on advisory boards to support and grow their businesses. So without that deliberate linkage to grow our businesses, we will not be able then to quickly see transformation within the manufacturing sector in Kenya.
Right. And speaking of building capacity of those MSMEs, for instance, Samuel, what is your association doing to boost capacity for those smaller players?
One of the things that the government has been doing is coming up with special economic zones, and we have been in talks with the government agencies to be able to see that the local manufacturers, like the people who are importing and they want to migrate into local manufacturing, they get their spaces there, because in the special economic zones, we're able to negotiate in terms of the cost of manufacturing. And when you look at the local, the Special Economic Zone Authority, they have been able to reach out to many, especially through our association, many of the people or the potential manufacturers, and they have given us the guidelines on how we are supposed to go about it. And it's an incentive, because when you look at CESA, they have been able to come up with policies which are not punitive in terms of actualizing that reality and making it, possible for, importers to be able to migrate effectively and smoothly. And having said that, we are a consumer-based economy whereby we rely on over 30% of the importation. Let me give an example. We dock about 1.2 million containers in the port of Mombasa every year. 30% of those containers, they belong to small, medium entrepreneurs. So it means that we get over 300,000 containers, coming from China and Dubai and any other, countries. So we are looking at being able to, to talk to and bring on board those importers who have capacity of importing, full containers, and see to it that now they can be able to do even like value addition in the country, apart from importing, fully fledged equipment and apparels and the rest, and some of the commodities that they import. Now, having said that, I would like to say that the government should be able to come up with policies which are able to, to bring incentives to the small, medium entrepreneurs. Apart from CESA, there is no other government agency which is doing that. And when you look at like what Phyllis is saying, there are so many handles that have to be, have to be dealt with. And I can give an example with what CAM is doing in terms of even getting membership on board from from CAM, I would like to challenge also Phyllis to be able to see to it that even the membership fee from CAM, if our members want to come and become members of CAM, they shouldn't charge high in terms of membership, because if you charge a person 35,000 shillings or 50,000 shillings to become, a member, they should come up with better rates, and maybe she should be able to answer that question, so that we can see to it that many of the members who want to migrate from importation to local manufacturing is because they have been able to come up with structures and systems which can be able to support that migration. And as she rightfully said, that there has to be a synergy between associations which are like ourselves and theirs, and have a synergy with the government agencies to be able to stimulate this sector. Because if we are not able to do that, if we work with silos and we work separately, we can't be able to achieve that.
Absolutely, and I'm sure, Phyllis, you'd want to respond.
Yeah. Yes, just to confirm, as I mentioned, we have an SME hub for manufacturers, which was founded about 2 years ago. And what we have done actually is heavily subsidize the fees for SMEs joining within the SME hub. It's below those prices you mentioned, Samuel. So I encourage you to let's get in touch and see how we can connect a lot of your members. And the benefits, I must say, are tremendous. And you listen even to the stories and testimonials from different people who have benefited from the SME Hub services. So we urge you to let your members come on board, those who are interested in transforming into manufacturing, because we are offering very subsidized rates and really supporting them. So they get a lot of value. And we're also working with different partners to see how we can do more to support the SMEs and people interested in local manufacturing. So even for the youth who have ideas, who have innovations, who are looking to get into manufacturing, we encourage you also to get in touch with us because we have an SME hub, and we'll be able to really onboard you and support you in your manufacturing journey.
All right. And on that note, let's cross over to Eldoret, where our very own John Wanyama is standing by to give us an update on the day's business and goings on there. Good morning to you, John.
A very good morning, Vicky. And in Western Gishu, the situation is almost similar like any other part of this country, because the pandemic really suffocated business people who are really trying to come up with several ideas, especially in manufacturing, as we are discussing there back in the studio. But now I'm privileged to have one guy who normally does business or who does manufacturing, especially for school uniforms. He had closed for the past 7 months, and he's having just maybe trying to open up to see whether he can see this business going up. But he's here with me. Dan, if you can tell us your name, what is your name, and maybe you normally do school uniforms. How has the situation been to you, and maybe are you coming back to the business as a manufacturer? What are some of the challenges are you going through? Do you have enough materials?
Yes, my name's Dan Odhiambo. I'm the director, CEO, Zaritex Kenya Limited, Eldoret, Kenya. I do school uniforms, and we have been down in business since March this year. And right now the economy has been opened, and we think now things will work out for us, because as you see, our company right now has been closed for the last 7 months. Almost 60 of our employees are at home. So we are just trying to recover and come back to business, because you see, even as the economy has opened, you still see the pandemic is still growing, and the upsurge of the pandemic cannot be ruled out. So we are opening up, and I hope that the government will be part of us and will help us so that we go back to our business where we were before.
They are saying there are loans, the government has loans, especially for SMEs. Have you received these loans? And maybe for these 60 people who are at home now, are you seeing any hope of them coming back to work?
Yes, the 60 people who are home are supposed to come back because they are our employees here. They are supposed to come back and we continue with our business. But I just want to urge the banking sector, because during the pandemic, we were given a holiday moratorium where we were told not to pay our interest or on the loans or even the loan. But right now, when you go back to the bank, they are telling you that you should again operate your account for the next 6 months so that they see how you've come up before they give you a loan. So they are making, let them remove the red tape so that we continue with business. They know us, we've been with in business with them, So it will be very difficult for us again to operate in the next 6 months before they see our accounts and again access loans to restate our business.
Okay. Fine. As you finalize, Dan, how has pandemic, maybe what has it taught you? Do you think it's high time that Kenyans now learn to manufacture their own products and other than just depending on maybe importation from outside? Since we saw the pandemic locking up everywhere, we couldn't access anywhere. What is your take on this?
My take is that the government should help us so that we produce locally. They should ease the taxes and also the cost of energy, as I can hear the economists advising us, so that we manufacture locally and depend on ourselves. Because if we manufacture and buy from here, we are able to create employment, we are able also to open up our economy, and we are able to promote our markets. So the government should just help us and provide us the essentials that are necessary, that will help us now to be able to set up the platform and operate within, manufacture in our own country, so that will also help us to grow. Yes.
Dan, are you worried? You have seen maybe just that numbers are growing again, especially because of COVID. Are you worried you will be closing if the numbers go up and school close again?
Definitely will be closing, because first, health is very much important. Our health is the most important and essential thing. So health first, then after that we can do other things. So if the pandemic continues, I'm sorry, we'll have to close down again and wait for the economy to, the pandemic to go down before again we come up and continue with the business.
Thank you, Dan. Vicky, I have one guy here, is a carpenter, and he has also won a government tender where he's going to do some desks for some schools. What is your name, sir? And maybe you won a tender. How are you working, especially during this pandemic period?
Kwa majina naitwa James Omondi. Na hii wakati ya corona tumejivuta sana na mambo imekuwa mengi, na kulingana na kazi yetu ile kidogo unapata unajikaza juu uwezi keti, watoto pia wako pale wanasoma.
Ulipata tenda ya kutengeneza madawati ya shule.
Yes.
Pengine umepewa pesa hizi, umeanza kazi hii na unajitegemea.
Tumepata tenda, ndio tunataka kuanza kazi leo. Na serikali imefanya mzuri kutupatia tenda. Na hiyo tenda tunataka tufanye kwa haraka, lakini kulingana na venye iko na hii uchumi ya sahi na hii COVID ilikuwa ni ngumu sana, lakini sasa tunaomba serikali kama tunaendelea na kazi, waone venye tunaweza kujimudu kwa kazi yetu ya.
Asante sana, Omondi. And Vicky, as you have heard from both of them, Omondi won just a tender from the government, and he's starting today to work on some few desks for around 70 of them for several schools, where he'll be maybe making some few coins out of it. But he's saying maybe also the government should maybe just move with speed so that they can give him money to start the job, because for now they have told him that he should start, and then the government will send money as he continues with the work. But as you have heard, Vicky, is that Kenyans are really struggling, and whatever they are doing, they're going just bring the government, that the government should maybe, or the banks should ease their terms so that they can maybe take loans to start and run their manufacturing sectors, in various sectors in this particular country, especially in Uasin Gishu. Rubadiri.
Thanks for that update, John Wanyama from Eldoret, giving a sense of what it's like for business people there. And I hope my panelists could hear Dan, who is a uniform manufacturer, and James, the carpenter. It's been a struggle. And when we talk about recovery during this pandemic, many of them haven't been able to operate at least at capacity for the last 7 months. Reginald, I mean, what does that recovery even begin to look like? The two gentlemen who just spoke in Eldoret, you know, they represent that majority of manufacturers, the MSMEs. What does recovery look for that bracket?
Recovery is going to be a long and painful process. And reason one being is The Kenyan policymakers misdiagnosed the problem at the beginning of the pandemic. The problem that the country was entering into was essentially an income crisis. So when you enter an income crisis, then you end up with what we call an aggregate demand crisis. That means there's no demand for services, which then becomes a vicious cycle, because if there's no demand for the products you're producing, basically for the carpenter or the uniform maker, you end up in the situation where they cannot pay their employees, so they'll have to send their employees back home, which creates even a more vicious income crisis, because now those are people that don't have purchasing power anymore. So as the government, the diagnosis was supposed to be, we are entering an income crisis and not a liquidity crisis. So the way we handled the situation, we handled it as a liquidity crisis. Central bank reduced cash reserve ratio and tried to pump a lot of money to the banking sector to lend. But if economic activity has halted to a ground, I'm lending money to do what with? So that misdiagnosis, as long as it continues and carries on right now, you realize demand in the economy is very low currently because of the number of people that have lost jobs and the number of businesses that are operating at very low capacity. And because of that, you realize it's going to take a long time to actually start getting out of this crisis again, as long as people remain without income in their pockets. So ideally, what the government then is supposed to come and do is to play the largest consumption role in the economy, or the largest aggregate demander in the economy. Because as the government demands, instead of giving people money, if the government demands the products, for example, like what they've done with the desks, you realize then the carpenter can get his people that do the desks, they get paid some money, and once they get paid some money, they can go buy bread. That means the baker can now continue producing the same level of bread and keep his employees employed. He pays them, they can go buy some tumba from Samuel's people, that person can import more, then you have things now moving. But if you just pump money into the banks and say lend, like what one person has said, the bank is not going to lend. It's private sector, they're in business, and they have to manage risk. And the risk is that your business is not going to recover in the next 6 months, 1 year. We have no business lending you money. So if this recovery is actually going to pick up, the government needs to move out of thinking we have a liquidity problem to realizing that we have an income crisis, which is causing a drop in demand for goods and services. And they have to come in and fill in that role. And it will be a cheaper way of doing it than them trying to, one, give tax incentives, or do the transferring of 4,000 shillings that they've been doing all along. Because ideally in a crisis, even if you give me a tax waiver, or if you reduce my taxation, I'm not going to spend it. I'm going to save it, because I'm not sure when this crisis is going to end. So it does not add into demand into the economy. And that's why all the money that has been flying around has not helped the economy to actually pick up. So we need to approach this as an income crisis, and the government needs to come in as the aggregate demand in the economy. If the carpenter's business and the tailor's business are going to start picking up again soon.
And Samuel, let me bring you in here, speaking to what Reginald just mentioned, that it's more of an income crisis than it is banks refusing to lend and offer capital that many of these small businesses need to recover and get back on their feet. What's the case for many of the members, in your association, for instance, in trying to weather this storm?
The government, and I was just listening to that gentleman, and he's waiting to be paid by the government. There's some money that was given by the government to small, medium entrepreneurs. And it was, I think, heading to about 10 billion shillings, then it came lower. And I remember what the criteria that they used so that you can be able to access to that fund was, they were giving bank guarantees or partial bank guarantees. And they were capitalizing on the medium entrepreneurs. But the small and the micro and the small entrepreneurs who are heavily dependent on importation were not considered. And so what has been happening, Victoria, is that, Kenyans are very resilient, and SMEs are very resilient. You see, they have their own, they have their own economic system. They have their own financial system. And that financial system is money that rotates within the chamas, money that rotates within the business community. They lend to each other, and sometimes at very low rates. And you see, once they do that, the money does not necessarily go into the system. And so that is why, as Regional is saying, that is why we have the government is not able to diagnose the problem that is happening, but still business is going on because people have created a survival mode that if they are not able to get money from the bank, then they can borrow money within themselves. And even SACCO have the SACCOs have not been able to lend money, as Regional is saying. So any financial institution that is governed by the central bank cannot be able to lend money today. But what our association has done is that, and we have been able to talk to our members, and the members are saying we cannot go to the banks because the banks are saying we have now to show that we have been able to bounce back into business, maybe 3 or 4 months deposit, and see how we are doing. And so that indigenous financial system that is on the ground, it really helps the SME, but it hurts the economy at large because even in terms of tax payments, you cannot be able to track that money to pay taxes. And so it has to be, this role has to be played by all the stakeholders. The government has to come up very openly, and it should come up as a friendly government. It has to have a human face so that they can be able to talk with the small, medium entrepreneurs. As people say, things in the ground are very different from what even we are talking here. Things are very thick down there, and the government should be able to come with practical incentives and practical ways to be able to caution these people and work with associations like CAM, our association, and many other people who have been organized to give them the actual data and to see to it that we are in the negotiating table to see that how that money can be dispensed accurately and you're able to follow the trail of that money.
Phyllis, Samuel just mentioned the need for government to have a human face and to respond practically to what's been going on. From where you sit in the manufacturing industry, you mentioned 90% of the businesses in the industry are MSMEs. So it's the Dans and it's the James that we just heard from in Eldoret. How are they weathering this storm? And do you feel the government has adequately responded in terms of some of the concessions that it's made, some of the support it's given, or a lot more needs to be done, especially as we begin this recovery path?
Victoria, thank you. It was good listening to Dan and James giving us experiences from the ground. As they always say, vitu kwa ground ni different. So government has put in place the different measures, whether it's the credit guarantee scheme that has been put in place, the CBR rate and the other incentives within the banking sector, and the others about corporate tax and the issues of pay as you earn and the 24,000 and below employees not having to pay tax. But the reality on the ground, as you heard from Dan and James, in some cases is a bit different in terms of the practicality of accessing the finance and different areas. From where we sit, what we see, and I agree with Reginald, is the issue to improve the purchasing power of the citizens. And purchasing power, at least the two incentives or the three incentives around having more disposable income were very positive in terms of improving the purchasing power of citizens. The challenge is that they are expiring in January. So one of the things we're saying is that we know that these impacts of COVID are going to go beyond January. And we do need to have that purchasing power and the aggregate demand growing within the economy. So it's really to say that can government look at these issues and see how we extend this beyond January, probably for the whole of next year or even into the next year, so that we stabilize demand within the country. The other thing, of course, is the Buy Kenya, Build Kenya initiatives. I can see the face masks in the screen. And this, I think, is something that we really must see more of. I like what has happened around PPEs, how we're able to stimulate and grow local supply chains, what is happening around the desks. And within all the sectors of the economy, there are about 371 products that have been identified by government. How do we ensure that we exclusively source for those products locally so that we can create jobs and stimulate purchasing power within the country? The last thing I'll speak about is the issue of the do no harm approach, because we spoke about it in our KPMG report as CAM, that at this point we shouldn't be making policies that do further harm. For example, things like the excise inflation adjustment that happened 2 weeks ago, we're already speaking about low purchasing power, and we make an inflation adjustment that pushes up the price of products, 31 key products in the market. Those are some of the things that we say are not practical. The issue of minimum tax that is coming in January, where we are going to charge a minimum tax to all businesses, that's another issue that's not practical, coming within a pandemic period. And that will affect a lot of low-margin businesses within the countries and SMEs especially. So in policy implementation, I think we need to see how we become more responsive to the realities on the ground, how we cut down expenditure, because a lot of this revenue we're trying to collect is really for expenditure within government. So just relooking at our fiscal priorities as a country so that we allow this economy to rebound. So it's critical that we support the SMEs, also that we have policies that don't increase the cost of doing business, like the excise inflation adjustments and the minimum tax that is also going to come into force. And we look at increasing the period of the incentives that have been given, especially those that give more disposable income to citizens in the country.
Absolutely. And on that note, let's take a short break here on Daybreak. We'll come back for parting shots for my panelists on this issue of growing the economy and tapping into the manufacturing sector. Really quickly before we go to break, a tweet here from Engineer Lazaro saying, owning the economy, the government should change the law and make corruption capital and offense. Government should empower local manufacturing by encouraging innovation and releasing money by lending to local innovators. Thank you for your feedback. Keep it coming using the hashtag Daybreak and of course at Vicky Rubadiri and at Citizen TV Kenya. We will be back. Stay with us.